G'day everybody, it's John Seville from the Acorn Wealth Corp, and here's your executive summary. Well, what a day in the market. We've had a big drop in the S&P today. Of course, we've been talking about open range, and we set that on Friday for options expiration. We closed within that range on Monday. Again, just kind of teetering lower again yesterday, and then today definitely broke that and had a strong move to the downside. So those of you playing options on the S&P should have done well. Of course, that means that we likely have a bearish sentiment to the rest of the week. We are entering some moving average support levels. We have been coming out of oscillating moves though, so we can expect possibly a dead cat bounce here. So basically we found a few plays on either side of the spectrum that could be possibilities here. So, firstly, here's a couple for the speculators out there. Now, I don't like to play penny stocks because generally they're obviously highly risky. So if I'm going to find something I want to play speculatively, I'm going to look for a company that at least has some volume that is coming into it. Now, today, this stock OTIV had huge volume, 5.22 million shares. Now, on the daily chart, what this is representing is basically a bump and run formation, or kind of a saucer formation. You can see it came down out of that channel, consolidated, then broke out. So this is kind of like a fallen angel trade pattern I'm very familiar with. And but what grabbed my attention wasn't necessarily the daily chart; it was the hourly chart. So for the speculators amongst us, there's a possible flag formation forming right there. So as you can see, the flag here came in the last couple of hours of the day. Big volume, charged straight up, pulled back, and we could be seeing a flag forming at this point. So I'm going to be watching this in the morning, and for those of you joining me for my live day trading session, I'll be looking for an entry on this tomorrow morning. Without seeing the morning data, it's difficult to say, but probably around the $1.55 hopefully is where we'll get a bounce, and I'm looking for a target up towards that $1.90 area, so maybe 187, and at this point I'd be looking at a stop loss around 137. So there's some interesting action there. Now, the other stock that I found also on the speculation side, so for those of you looking for those speculative plays, Seed. Also on the 1 hour chart, you can see here we had a very big move, and if we go back to the daily chart, you'll see that's more prominently a possible flag as well. So the flag firstly happened up from this $1.13 to $1.60, pulled back and went again. So we look at that flag. There is potentially another flag forming right now, so a continuation of that could take us even higher up into the $2 range. So looking at that on the hourly chart, I'm looking for possible entry around $1.48. Just see if we pull back to that level, which would be just around where that moving average is, and then rallying up into that $1.87 level. So that's another speculative play that I've been looking at. Now, in terms of more kind of conventional stocks in the higher price range, let's flick over to that now. So if we go over to one stock that I saw was TVPT. Now, TVPT has both has a lot of institutional buying, and you can see that we've basically come down. After this drop, we've got sharp money flow reversal here, and it's looking like it's, especially seeing as we've had a big down day, the volume has been fairly strong and a very strong close in the candle. So on TVPT, I'm looking for a entry at 16.20, and that's if it pulls back to its intraday support, or a break of 16.46. So either one, if we get a pullback to that level, I'll enter there. Otherwise, I'll enter when it breaks at 16.46. And I'm looking for that to rally up to 17.67, which is just shy of this 77.7% Fibonacci. So that's on TVPT. EZPM is the other one I found. Oops, excuse me. That should be EPZM. And this one you can see has had a very aggressive bounce off this support line. Now, it has been tested a few times, so there's some caution here. 1, 2, 3 times. So the rule of 3 we generally want to avoid because the support becomes weaker. But for a day trade or a very short-term trade, keep an eye on this level around 17.98. There could be a possible intraday bounce up into this $20 area. So if you get that, it's about a $2 bounce. And I guess despite the fact that there's the potential weakness, the last bounce was very, very strong. So this is the only time where I ever really kind of break the rule of 3, 3 bounces of support and you're out. Is because there's a decent risk reward. Because there's a stop loss I'd look at would be 17.53 under the low of this candle, and from 17.98 up to say around $20. Let's have a look here. We're looking at around about 2030 or 2027 is actually what I'd be looking at. So there's over $2.20 reward for about 45 cents of risk. So with a 5-to-1 risk-reward ratio, I'm willing to take on that extra bit of risk, even though there's a higher likelihood of the trade failing. Now, on the short side, let's go over to that. So again, on the long side, 2 speculatives and 2 higher price stocks. On the short side, they're mostly companies that have a higher price. So for those of you who like to trade options and things, they're obviously candidates. Big drop in the money flow here. You can see we've got divergence. Higher price than before, but much lower money flow. Now, AMP has also got significant insider selling, and that's what I liked about it, as well as the chart pattern. So if we look at AMP, you can see it's breaking down. Let's get some of that noise off the screen. And so I'd be looking at this as a possible entry around 129.85, which would be a break of the current low down to 121.57. So just slightly out of the money puts. Looking at an April expiration could be very beneficial there. And I'd be looking at a stop at 133.07. So we're looking at roughly a $3, roughly a $3 risk for an $8 reward. So again, good risk-reward ratios on that. ADP is the next. And this one, you can see, this actually also has had insider selling. So again, another positive. You got a possible descending triangle here, and we've got a support level here that's potentially about to be broken. Again, good divergence on the money flow. So I'd be looking for a break of 84.61 on this, down to 75.41. So we're looking at about a $9 potential reward. So from 84.61 down to 75.41. And this would take us down to that just above that previous resistance level. I'm not too concerned about the 200-day moving average here. I think that if this was to break the support line, we're going to get a more significant drop. So with the heavy insider selling, I'd also put a stop loss there at 86.34, which is just slightly above where that intraday support is. If we go to the 1 hourly chart, you can see that's basically where that above where that previous bounce was. Also support for this rally here, and where the drop originated from more recently. So that gives us about a risk of $1.80 for a fairly reasonable reward. So again, very good risk-reward ratios, and that's what I'm looking for in a market where we got a lot of volatility and bounces. The risk-reward is going to be very important, because we want to kind of ensure that even if we only got half our trades right, one good trade's paying for 5 bad trades or 5 losses. So risk-reward ratios are key here, and I'm happy to have those tighter stops with a higher quantity of trades versus going heavy on one. The next one, and second last one, is INFY. Now, INFY on the daily chart, you can see, has some interesting characteristics. Doesn't have any insider selling, but from a charting perspective, we've got a potential head and shoulders pattern here. So if we look at the extension of the head to the neckline, and then extended that down from where the breakout point would be, you'll see it's the same point that we gapped up from before. So when I see that confirmation, I really like that. And so I'm looking at this as a potential short here from 34.48, which would be a break of that trend line. So 34.48 down to 32.47. So we're looking at about $2 reward, and I'd have my stop at 35.58, which gives us about let's have a look here. Excuse me, so the entry of 34.48 down to 32.47 with a stop at 35.58. So we've not as good, but it's got about $2 of reward for $1 of risk. But we do have a high probability pattern on the head and shoulders there, which typically plays out well. And the last one on the list is CRIS. You can see this also has got it's just come out of a descending triangle formation, which you can see if I move these lines away here for a second. Okay, now we're challenging the 38.2 Fibonacci here, and looking for a drop down to this level. So as far as this one goes, looking for a 257 entry. Excuse me, 251, which is a break of today's low and of the moving average beneath it, which is at 254. That's the 50-day moving average. So if it breaks that and the low of today's candle, that would be 251 potential entry point. Looking for a target of 211, and I'd be looking at a stop loss of 275. So we've got 24 cents of risk for 40 cents of reward. So again, more 2 to 1. But that's got some reasonable potential there. Again, obviously watching the market in the morning will help you to get some better entry points. And if you're involved in our live day trading session tomorrow, we'll be covering all of these stocks and actively trading many of them. I currently own no positions in any of these stocks, but we'll be obviously looking to trade those tomorrow morning. So if you are joining us tomorrow, look forward to seeing you. If you are interested in having access to such things as our live day trading sessions or frequent daily updates on all these types of stocks and other ones we're looking at, go to acornwealthcorp.com, click on Contact Us, and request a trial of our services. Looking forward to seeing you all soon. Have a great night, a great day, and happy trading.